Well, hello there, everyone, and welcome back to the lunchtime show with Jose and myself. Welcome, everyone. Hello, Jose. How are you?
What's going on, Neil? How's everything, man? You were late this time.
I was late this time,
Strike
but
one.
I was multitasking at one moment. I'm going from one live to the other. But yeah, we're a couple of seconds. We're a couple of seconds late. But yeah, hello everyone. Thanks for tuning in. We are going to provide a little bit of emotional support today, as with the last couple of episodes in this crazy market. So welcome.
This is therapy couch hour with Jose and Couch.
Yeah, not sponsored by BetterHelp or anyone.
Hey, we have to hit them up, see if we can get a sponsor there now.
For sure.
And just a quick shout out to everybody right now. I mean, we have Barney, we have Public Display, we have June, Victor, Ario, Esteban, Waldo, Ruben, Gary, and appreciate the support from everybody here. Hopefully, Matthew. Hopefully, we can share some cool discussions today, Neil. I mean, I haven't looked at the map yet. How's the heat map looking for stocks today?
Well, you want heat map? I give you the heat map. This is basically it. So all in all, okay for us, I guess, with an Nvidia that's a bit green, with the Meta a bit in the green, but it was much better at the start of the day. I can tell you that.
Yeah, yeah, I saw I saw like Tesla was up about 5% at the beginning, and then it went red. It's back to green, so we can't complain right now, right?
Yeah, no, I mean, compared to what we've seen yesterday, I think today is quite a good day, because yesterday was absolute carnage, but today, I mean, maybe this is a bottoming or a dead cat bounce. Who knows? We also have inflation data coming out, I believe, tomorrow. So that could definitely play its part. But I mean, all in all, the last couple of episodes, we've also always said the same thing. It's a bargain hunting time, right? Lots of great companies trading at very, very attractive prices for the future. And I'll say something crazy. I've never felt
I like
this.
crazy. Go ahead.
I've never felt this confident and comfortable with the companies that I own, which is, I know some people will say, oh, you're nuts. How can you say this? Look at the market. I'm like, exactly. Look at the market. I look at what I own. I'm like, okay, great companies, great prices. I'm not complaining.
Yeah, it's same Neil. I mean, I don't think I'm worried at all. I think I finally started. I don't know. I'm just very excited about valuations. Obviously, some of these investment theses, you have to have maybe thoughts and things like AI innovation. But from everything I'm hearing, I think we're still pretty good. I mean, Oracle just reported earnings. Did you take a closer listen to it, Neil?
Yes, I even did a video about it.
Some great news came out for, I mean, NVIDIA and AMD there, right? We saw that NVIDIA's, they're building a 64,000 GB200 GPU cluster. And even with AMD's 350X, MI350, they're building a 30,000 GPU cluster there. So obviously, I just reminder, Oracle has been a purchaser of MI300s. So this is not a net new customer, but this is going to be a giant cluster, and it could be kind of very bullish overall for AMD. Now, Neil, I don't know why I've always thought it's the 350, but I also hear a lot of people call it the 355. Um, which one is it, Neil?
Well, according to what I have on my screen, it's MI355.
But every time I feel and AMD discusses it, it's the 350, unless they just mean like the 350 series, so you can have
Yeah,
like a
probably series. Yeah.
350-ish, whatever, you
Hmm.
know.
Yeah, but I mean, it's good news. This is good news. Although the quarter for Oracle was a miss, right? It's a basically a miss across the board. But the fact that the backlog, the basically the remaining performance obligation, is now at $130 billion. That's up 63% year over year. That's nuts, and that is without any Stargate project commitments. Which, again, great news, great news. Um, so yeah, pretty good. Any things that you wanted to touch on from Oracle?
I mean, I think while they did miss in revenue and earnings per share, I think a lot has to do with kind of their capacity seeing a bit of a slowdown. But they mentioned that the capacity issues are mainly due to Blackwell. And Neil, I don't know if I've discussed it with you in previous. I was always wondering why NVIDIA really wanted to ramp up that production of the Blackwell so quickly in this upcoming quarter that they're willing to take a crazy margin hit. And I was listening to their conference event last week, March 5th. And they mentioned the main reason, Neil, is they promised a lot because of their issue, right? They did have promised a lot of these AI data centers, some of this capacity already. So to keep their customers happy, they're trying to expedite that manufacturing of the Blackwell platform to be able to kind of keep up with the promises they had here. But so yeah, I mean, like you mentioned, none of this included the Stargate project. Overall, RPO grew dramatically, and they do expect the Stargate to be coming first contracts to be coming pretty quickly.
Yeah, I mean it was a very interesting. I mean, we've seen that also. I think 2 quarters ago, where also the results, you would have thought that the results would have been much better, but it's all about what they have in the pipeline. And I think what they told us is that fiscal year 26, fiscal year 2027, we're going to see things accelerate and continue to accelerate, which is good news for this whole AI story. We're not at the end just yet.
And here, Nathan may be correcting us. So the 355X is the first model of the 350X series. So yeah, it seems I guess like NVIDIA has kind of like the Hopper series. You have the H100 and the H200. I guess here we kind of have very similar thoughts, similar things from AMD. I wonder though how many models they're going to release out of here. I'm gonna guess they're probably going to have some maybe Chinese variant. But the other one, the MI400. Um, I am going to be curious now, Neil. Probably they'll discuss this later on, but since they did move up the MI350, now you're going to have kind of like a year and some change between the MI350 and the MI400, or are they also going to kind of give us update later on that they might be moving that one, maybe even a little bit earlier, to kind of match maybe that annual cadence still?
Yeah, I mean, MI350 is for mid 2025. So what are we in March? So they have like 3 months left. MI 400 2026, but we don't know when, early or late or mid, whatever.
I would say typically they do release on they do that yearly cadence. So the MI 300 was like late 2024 when they really, or not 300. The MI 300 was late 2023. The 325 was late 2024. The 350 was supposed to be late this year. So based on that, I would have expected the 400 to be late 2026, but wondering if they might pull that up with the excitement that they're seeing here with the 350.
Yeah, plus competing with NVIDIA Rubin as well, especially if they believe this is a highly competitive product with ZT system. I think we might see them pull that one forward as well. So interesting times. Not gonna lie, I think interesting times. I do want to address one thing here from the comments. Anyone knows what happened with Amit? Amit didn't stream today because I think he's sick, from what I understood. So that's why. Nothing more, or maybe he doesn't like the red in the market, which makes sense. I also told him to touch the grass a little bit, so I guess it's a mix of everything. But no, all in all, he didn't feel well, so that's why I skipped.
I gotta text him then. I haven't seen text him. Hopefully he feels better pretty soon. Let's see, Neil, any questions here that you might wanna take a closer look at?
Let's see. I think we touched on this, but we can touch on this again because I think this is going to be a recurring question. How much will the tariffs impact NVIDIA and AMD? If I want to touch on that real quick, I need some water.
I mean, all these tariff talks, all these companies do have kind of their manufacturing outside, and the other things is they do get sent to other places. To be honest, I don't know. I don't know how much it will impact. I would say a lot of the pricing will be passed down through whoever gets sent. So it's a discussion. As a semiconductor investor, this is something that comes. If you've been historically a semiconductor investor, tariffs, export restrictions, all these types of volatility that you get with either new or old administration, with tensions in globally, it's something you should be expecting. It's always a risk here. I don't think AMD or NVIDIA are going to be any less competitive than they are right now, because pretty much the whole industry is going there. So I'm still very bullish on NVIDIA and AMD with or without the tariffs.
Agreed. I think we're going to get more information. What is it, April 2nd or something like that? So we'll see. But we have already seen the impact of export restrictions for these types of companies. Didn't really stop them from growing that much, if we're being honest. Could have grown more, of course. But I think that their core business is doing well. I think Trump is meeting with a lot of tech executives this week. So we'll see. We'll see what happens. Short term, expect even more uncertainties. Expect more deals as well. So can't complain. I mean, I can complain. Can always
Go
complain.
ahead, complain.
Can always complain, but in the long run,
I mean, right? I think it also depends on everybody here. Everybody has their own financial story. I think we've said it that to us, the money we have in our portfolio we don't really need anytime soon. So I do believe future me will still be very happy with my investments on AMD and NVIDIA, and very much for any other stock. Kind of seeing the volatility pressure. I'm pretty sure with everything with volatility, tariffs, macroeconomics, you can kind of say the same thing. But I mean, it's not like we haven't seen a crash, and we saw something very similar after the COVID bubble. And future me is still very happy on a lot of the stocks that I own. So I think volatility, and I think we can agree, Neil, volatility will continue. If you're a short-term investor and if you need money money from your portfolio, within the next few months, one of the biggest things is that's not something you should do. And right, because volatility, even though you have massive long-term tailwinds, short-term, the market likes to react as it wants.
I agree. I just came off a stream with Danny, and we had like two very interesting questions. One is like, if you had to pick 3 stocks today to hold for the next 5 years, and then we had another question, if you had to pick just one stock for the next 10 years, one buy, you cannot touch it anymore for the next 10 years. So for the one stock, I actually gave the answer of an Amazon as a safe play, because in the 3 stocks I talked about Amazon, Alphabet, and probably AMD at current prices. But I'd love to hear your thoughts. If you had to pick one you cannot touch for the next 10 years.
Yeah, if I was looking for something in the next 10 years, I would have to think something where, well, they will innovate. Innovation really wouldn't be too much of a competitive push. Um, I wouldn't put NVIDIA because I think NVIDIA is one that needs, you need to kind of every year or so need to reaffirm its position lead and stuff like that. So I couldn't put that for the 10-year. I probably would put that in one of the 3 for the 5-year. For the 10-year, Neo, I would go with one of the big tech, and I would say Google. I think Google, well, obviously the market thinks AI will cannibalize them. I think this is one play that I believe will still be a strong player 10 years from now. So I would go with that safe approach. If I was to take a gamble, maybe I'm not sure, but I definitely would go a different way if I was a little bit more risky.
No, fair enough. Fair enough. Yeah, it was quite interesting to hear the opinions of Danny and some of the comments we got. But yeah, I mean, I'm not complaining. We've said it in the past. We look at the comparisons 2022 bear market to what we're seeing right now as a small correction. We are in a much better place today than we were back in 2022. So it's true that it's not nice to see your portfolio get crushed in a matter of weeks, but on a year-over-year basis, we're still up. Even on the 6 months, if you go back 6 months, still up as a whole. So yeah.
And I mean, I think Martin here, just be patient. If you have cash, buy the dips little by little over time, because obviously the dip can keep dipping. But I agree. I think patience is one of the biggest things that long-term investors have, especially if you own companies that are seeing some form of results now and have growth opportunities. And by that, I mean, I feel like speculative plays are going to take a lot harder hits during this time frame. And speculative plays always kind of have that speculation if growth is going to continue. So I wouldn't say every stock will return back to normal levels. I mean, I think we still see a lot of stocks way below their COVID balloon high. But kind of like a lot of those big tech players, a lot of those kind of strong companies that still had growth opportunities are much bigger than they were before.
I agree. And it's quite refreshing to see that a lot of the hype stocks that have gone up quite a lot are now getting back to normal levels, right? We've seen in the last, at the end of 2024, plenty of these stocks suddenly go up 100, 200, 300, 400, even more in just a matter of a month or so. Seeing them pull back basically almost all of their gains means that suddenly the market is in a much better place than previously.
I like this one from Yanlu. Neil, valuations of big techs are getting interesting. Meta, Microsoft. Do you think the valuations of big techs like Meta, Microsoft will be impacted by tariffs? I mean, I think there's always some form of funnel and everybody gets impacted. I mean, Microsoft has a lot of consumer technology products. I mean, Microsoft is very dependent on the Windows ecosystem. So obviously if tariffs kind of increase the pricing of the PCs and stuff like that, you can kind of see an impact on Microsoft. The other thing, companies like Meta, you would think, hey, look, they're either kind of, they don't have a real product that they sell or a physical product that they sell. So they're probably immune to stuff like this. But if businesses, again, I'm not saying this is where we're going, but it's good to kind of think, if businesses start to maybe see pressure in their cash positions, they try to reduce some of the expenses. And unfortunately, which seems backwards to me, one of the first places they stop spending is advertisement, even though advertisement becomes a little bit cheaper, becomes probably could be a good tailwind overall, but you kind of see the pressure of stuff like that impacting the advertisement market. I mean, during COVID, one of the big things is we saw a massive decline in advertisement spending. So when even companies without physical devices or things that are made overseas can still see, all depending on kind of like consumer sentiment. And you know what, Neil, things might not even be bad, but just the sentiment itself could shift, even if everybody's still in the same boat. Just sentiments can shift, and consumers may be like, you know what, I'm still okay. Maybe right now I should start saving a little bit more money, and then that trickles down to everything else. So I'm not saying that's what we're going to happen, but I wouldn't say anyone is immune to it.
I agree. I think on the more positive side of things, you have a weaker dollar at the moment. And remember, a couple of weeks ago, plenty of these companies' guidance was weaker than expected because of FX headwinds. Well, if those FX headwinds suddenly turn into tailwinds, might have an easier time beating their own guidance in the next couple of quarters, which we should start to pay attention to that, because it could play uh, a big part in the next, I would say, 2-3 earnings season. So yeah, and again, we're talking about short-term things. For the long term, we're not really going to look at the tariffs scenario that's been happening right now. Same thing that happened late 2018. Who even talks about that anymore? Very few
Yeah,
people.
I agree, Neil. And this is why I personally haven't really sold anything of fears of this. And I think for me, the easiest way to think about it is I try to increase the chances of me being right. Let's say tariffs, let's say I sell my position and all these tariffs things have already been priced in. And then the next few weeks, we kind of see a massive green rally. I miss out on that rally, and future me is going to hate me. If I don't sell, um, and nothing happens, then I'm happy I didn't sell. If, let's say, I do sell and the stock prices go down, I wouldn't know when to go back in. But regardless, 5 years from now, I feel like stock prices will still be higher than they're at right now. So if I didn't sell, I still would be right. So I feel like for me, the best approach is not be active, not sell, not worry. But if I could increase my money that I would kind of put into the accounts. Maybe I do have like a budget right now. Like I recently sold my house a few years ago, and I've been kind of just saving more to buy a new house. But now I've kind of gone to the wife and I'm like, hey, look, for these next few months, this money that we were saving for house purchasing, we're putting it into this bucket that we have for weekly investments or monthly investing. So that bucket has become a lot bigger in these past few months. And maybe once I feel valuations are going to start getting heavier, or I switch it back. I put back to, hey, look, we're going to go back to saving for house again.
So what you're saying is you sold your house to bet the house on Nvidia a couple of years ago. Turned out to be a very smart move.
I wish that was the case. It was funny, I think this past weekend, my wife comes up to me and she's like, "What if we put all our house proceeds when we sold them into Nvidia? Where would we be at right now?" It's like, don't even tell me that right now. We would be having a mansion like no tomorrow.
Yeah, you wouldn't have the conversation of new house, new shares. It would be like, how many houses? One day, one day. Um, we got here a question from Matthew. Thoughts on Cathy Wood selling her full position on SoFi? Usually that's a bullish thing, I would say. I would say usually that's a bullish thing. It's like when Jim Cramer turns bearish on a stock, it's bullish, and when he turns bullish, it's bearish, which is not a good thing, because yesterday I think he said we should be buying the bottom or the crash, which means we might be going a bit lower. But jokes aside, I don't care, to be honest. I don't care whether she buys, she sells. I like SoFi. I think it's a good business. I think they'll perform very well in the next couple of years. I know plenty of people that don't like the stock. That's fine. Don't buy it. It's very simple.
And there was something about Nathan here. Nathan keeps discussing the CT acquisition. Oh man, I lost it. Let's see. But he was kind of discussing that CT system is manufactured in the United States and might sell its manufacturing division at a higher price than expected due to Trump's made in US policy. So, right. So, I mean, this acquisition with AMD and CT, I think is going to be very bullish. And Nathan, I'm not familiar. I haven't really looked at their location, but obviously if they do manufacture the systems here in the United States, I think that's going to be an ability to kind of sell that at a higher pricing power for AMD. I don't really think AMD is going to try to kind of squeeze out every dollar for it. I think at the end of the day, they just want to get that engineering team and get rid of that manufacturing as soon as possible.
Yeah, I mean, we talked about that, I think, a week or so ago, right? They were looking to sell it for around $4 billion. So whoever buys it, I mean, good for you. You're not getting manufacturing in the United States. Could get some tax incentives maybe from the government, but for AMD, it's all about getting that money back and maybe more.
So here we got some love here, Neil. Love your show, guys. Appreciate it. Means a lot. Neil, do we have any stocks we disagree on? I don't know if we disagree on anything, but we don't always have the same stocks in our portfolio. Like you have SoFi. I don't know about SoFi. I wouldn't buy it, but it's not because I think it's a bearish play. It's just an industry I don't follow.
Yeah, I mean, I have fintech. You don't. I have a Walt Disney. You go to Walt Disney.
I spend my money to make your shares hopefully higher.
Yeah, hopefully higher, because I think it's back under $100 at the moment, which okay, it becomes even more interesting. But are there any stock we disagree on? I don't know, because we're both investors in tech and semi. So
yeah, I feel like, Neil, every stock, no matter how bad or good it is, it has a growth opportunity. Now, the risk to reward is a little bit different and the risk to success is a little bit different. But if someone wants to come to me and tell me like, hey, look, I'm super bullish in this company, and they gave me a thesis, who am I to kind of disagree with them on that thesis? It's not an investment I would work with, but I do believe that every stock in the market has some form of growth opportunity. And yeah, which maybe might be the little too much optimistic guy in me though.
but no, but I mean, perma bears make way less money than perma bulls. So I'd rather be a perma bull and get burned on a couple of things, but make sure that the majority makes up all of the gains.
Yeah,
Intel.
Intel might be like, I don't own it, and while I do believe there's a huge growth opportunity for them if they turn things around. I think Intel could be a massive player, but it's just not one that mixes for my risk to reward ratio, right? So it's not that I don't, is that disagreeing? I don't know. Hey,
No,
they're trying to break the ban up.
Yeah, no, because you agree that there is a reward if they turn it around. The only difference is that I have a position and Jose doesn't. But then again, you're already heavy semi stock, so doesn't make sense to add another name to the bucket. But yeah, I mean, Intel, to be honest, if it works out, I think they have to send me something for free, because I've been here cheerleading for them for so long. They better come with some rewards. But yeah, there is Fernando asking here, what's my opinion on Uber? So we both own Uber. So again, we don't disagree here. We actually agree. We both own Uber. Very bullish on Uber. I think they'll play a big part in the transportation future, autonomous, not autonomous. They've got good investments in a lot of autonomous vehicle companies, partnerships as well. So I'm bullish. I think they'll do well. They're becoming more and more profitable. They're still growing, so can't complain. And it's actually still doing quite well year to date, which I'm quite happy.
So Neil, Emma, do you ever try to have like a cash position to buy the dip? If so, how much? It forces like, I guess, percentage of your overall portfolio.
So right now I am close to all out of cash today, and I have to wait another week or so to inject more cash in the portfolio. But I started the year with, I'd say, 14-15% in cash. Last week I had 6-7%, and of course, with all the gifts that we've been getting more recently, that 6-7% has come down. But yeah, I'll inject some cash the next week or two.
Yeah, same. I think in my portfolio at the earlier this year, I kind of had like about 10 to 15. I don't remember the actual number. I was just kind of um, selling some of these shares. And we've talked about it in the past where I just felt I was getting too AI exposed and I didn't want to sell out just of I didn't want to sell Nvidia, but I wouldn't mind selling some of these other AI exposed companies that I had. Um, and when I sell, I never sell completely. It's more just trimming. But in the past few days, that has dwindled. Like I mentioned, I also have that kind of cash for a future house, which is, I would say maybe closer to like 60, 70% of my oil portfolio, but that's in like a restricted cash. Like if you look at a balance sheet, where it says restricted cash, I would have to go to the wife and really kind of showcase, hey, look, it's time for us to get rich, babe. All right. We're going to get richer than we are right now. I don't think we're at that moment yet. What I'd rather do right now is, is just kind of shift my overall savings plan to do a lot more injection. And eventually, if we start to see maybe only one views per video, I think that's when the market is really, really bad. And that's when I'm going to go to my wife and say, hey, look, it's time to inject this restricted cash we have.
No, yeah, I agree. And there was one comment I wanted to touch on, which I know I said I'm going to inject some cash. I've been buying. I don't know when the bottom is. I don't know. I wish I knew, but it doesn't matter for me because I know that the value that I'm getting today and last week and the week before that is very, very good. And 5 years from now, 10 years from now, I don't think waiting a couple of days or a week would have made such a big difference. Plus, I also know that I can inject more cash in my portfolio because I have cash on the side sitting outside of portfolio waiting, and well, it's available. It's available. So I have that luxury. Of course, if I didn't have that extra cash that I can inject every once in a while in the portfolio, of course, I would have been less aggressive with my buying, if that makes sense. I know I don't have a tree with money laying around. I know some people think that because I'm bullish all the time, then I have a tree where I can just pluck the Benjamins of it. But no, it doesn't exist yet.
Yeah, yeah, not yet, right? We planted the seeds. Eventually, we'll have that tree, right, Neil?
Yeah, or trees or forest, who knows?
Yeah. Let's see, Neil. Any questions you might want to tackle, Neil?
Let's see. More comments on AMD. I think we still both like AMD, even if it's under $100. Meta, Meta is now, what is it? Still under six? Yeah, it went back under $600. That's very interesting. Not gonna lie, I will, or I have been dipping my toes in Meta. First time in a long time, actually. Do you own Meta?
Yeah, Neil, I do. But I haven't really added to it much. Um, Usually right now, Neil, I kind of it's really weird when I kind of look at like Amazon, Google, Microsoft, and Oracle. I kind of put them all in the same bucket, at least those four players in the cloud space. So Microsoft, Amazon, Google, and Oracle. So I try to see per year, like, or when, which one will give me the best return, or I'm expecting the best return in kind of the cloud space. With Meta, I kind of then have another bucket of Meta and Google. I think in both scenarios, Google is winning in both the cloud space and kind of like the advertisement space in forms of valuation to risk. I'm not selling my Meta shares, but I think I would prefer Google right now over Meta, as they obviously do hit a lot of that core market. But bullish on both.
Yeah. Okay.
Yeah.
No, fair enough. Let's see. By the way, did you see anything interesting come out in the last couple of days, news-wise?
Let's see what. I don't know. I feel like I read a lot, and I don't know if what I saw. I don't think so. Uh, when did we tested Thursday? Did we talk about the crazy subscription price of OpenAI? That there were rumors. I think we
I
did talk
think I
about that.
think I think we talked about that in a full live video. But I don't think we talked about in this live one.
Oh, okay. So we did another live. All right. So that that one, Neil, I thought was pretty. Over the past few days, we have heard that rumors that OpenAI is thinking of kind of releasing around $20,000 a month subscription. Um, I thought that's ridiculous. And this is why it gets me excited about AI actually getting cheaper, and why NVIDIA really wants AI to get cheaper, right? With 20,000, they mentioned these $20,000 a month is obviously something only a few players and industries will be able to pay. But if AI gets cheaper, let's say AI gets 10 times cheaper, that $20,000 a month subscription will be 2,000, and then the amount of people that would be willing to buy it or businesses, and then if AI gets cheaper than that, let's say 100 times cheaper than the original, be a $200 a month subscription. So I think the demand for AI compute is going to continue to grow, and I am very bullish to see AI get cheaper and cheaper. So in the upcoming months, I would say if we hear reports of AI getting cheaper, I don't think it should be a deep seek moment where it should bring down stock prices. I think investors should see that as a very bullish sentiment for the stock.
Okay, fair enough. I'm scrolling now through a news feed just to see if we missed something. So, Anthropic apparently reached $1.4 billion in annualized revenue. We had CoreWeave file for IPO, I believe. I don't know if you had time to look at that. I did not. I just saw that they're very, very concentrated when it comes to the revenue that they generate. I think Microsoft is a huge, huge part of that. But that could be a very interesting one. And then I've seen that Meta is working on diversifying from Nvidia. Another one of those headlines that we keep on seeing, I think, on a bi-weekly basis more recently.
And I mean, I think obviously these headlines are great for clicks. But I think at the end of the day, Neo, all these big tech players just don't have enough infrastructure, and they need to just find other ways to increase that infrastructure. And Meta, especially Meta and Google, they do have a lot of internal solutions with their TPUs and Gemini and whatever Meta is building and their Llama platform. So I think big tech is going to continue to increase wallet spending. You're still going to buy a lot of GPUs, and they're just going to spend a little bit more than normal on their ASIC solutions because they also want to increase their capacity. So I think the market believes they're going to eat the market share from NVIDIA. I don't think that's anywhere near true.
Yeah, and I mean, both AMD and NVIDIA have talked about GPU versus custom chips. And explained why they'll continue to dominate and why they can coexist as well. So I think we should be fine. There are a couple of comments here about AppLovin. I don't know if you know the company, you've been following the company. I only know that the stock destroyed the market's performance and every other stock out there as well in the last 2-3 years or so. I also know that there have been a bear report that came out that questioned their numbers, but unfortunately, I do not cover the company. But Jose, you as a Unity shareholder, you know that AppLovin wanted to acquire Unity a couple of years ago.
Yeah, they should have said yes
Worked
at that
out. Yeah,
time.
yeah, it could have worked out much better. But yeah, unfortunately, I do not cover or follow the company close enough to share a real opinion on
Yeah.
that.
Uh, yes, Sam. I don't follow AppLovin. The only thing I know, Neil, is Unity has mentioned that they're very excited about their move to Unity. I forget what they called it, their new AI ad platform. And obviously AppLovin kind of hitting similar type of ad markets. I guess that could be bullish for that market as well. Neil, I like this kind of comment from Max. And it's like, what is the difference in this correction from the first one in 2017? Why do we not get trapped once more? I think the easiest thing I can say, and kind of what we were talking about, Neil, stock prices, no matter what you did, if you ended up selling in 2017, okay, but like, I don't remember the actual correction. But stock prices are much higher than it was in 2017 right now. So if I kind of, what's the difference? I don't think there's going to be a difference. Obviously, there's going to be volatility, but I think 5-7 years from now, we're going to be in this scenario. So it's like, what crash that we saw in 2017? My stocks are much higher than before. So I think this is the strength long-term investors have. Obviously, we say short term and it could last a few quarters and a few months, and that might seem pretty short, but days, I feel like red days last a little longer than green days, or it feels a little bit longer. But when we kind of think about it, hey, what happened in 2017? Stock prices are so much higher than they're at right now. I think that can help us with our mentality for our portfolios in the long term.
Yeah, and quick correction on the correction here. It's 2018, back half of 2018. That's where we saw a big crash on again trade war with China. China, I pronounce this quite well these days. Why do we get trapped once more? Good question. I don't know. But I can tell you that in 2018, thanks to that crash, was the first time I opened a position in Amazon. And now Amazon is my second largest position in the core portfolio. So I guess it worked out quite well. I think it was at $60 or something like that back then. So yeah, use these opportunities to build long-term winners and positions because yeah.
And like I think we've said it, but just want to reiterate. I don't think while we are buying the dips, we would never kind of like, I would say, over leverage on dips either. Just because you dips can continue to last, right? It could be something that can last. It could be lucky, it lasts maybe a month or two. It could last a few quarters. It could sometimes even last a year. I mean, I think Nvidia and kind of the previous tech cycle was at least we saw a year or so of some of like these low stock prices for the tech space. So that's why it's crucial not to leverage, not to maybe spend all money at once, and to have expectations that in the short term, things can still be volatile. In the long term, I think you will be very, very happy.
Yeah, no, I agree. To be honest, I don't think I've ever used leverage. So not really my thing. Quick question on from Zorg. Do you think the Fed will cut rates this year? If yes, how many times? So currently the market expects, I think, 2 cuts at the moment. I would be surprised if we don't get at least 3. That's my prediction. I know a couple of months ago the market was expecting a bit more, but then expectations went down. It's not just 2. I think it's minimum 2 um, because of everything that's happening in the economy would push rates down, which again, some people might say, oh, it's bad, but not really. You put rates down, mortgage rates come down, builders starts to build again. People can maybe afford a house. You balance the budget, better fiscal policies. I mean, to get nice things, you usually have to suffer a little bit. In life, that's basically it. So if we have to suffer a little bit, but it's going to help us all in the long run, I think we should be fine.
Agree, Neil. And one thing is maybe not all our portfolio positions are gonna do great, right? Neil, we're definitely gonna have some losers, but I think again, Neil, it's they're blending all. I don't know if it was in this life or another life that you mentioned that stocks can only go down 100%. That's if they completely crash. But a winning stock, I mean, they can 5x, 10x, and very much grow a lot more than what you lose. So in the long term, you're gonna end up having losers, but I think it's the winners that are definitely. It's for sure the winners that make your portfolio shine during in the future.
Yeah, no, I agree. I mean, I think everyone with a couple of stocks in their portfolio has a couple of losers, but the winners outshine the losers by a mile. Right? I've had losers in my portfolio, but I have winners. Like you said, a loser can drag your stock down 100%, and that's if it goes to zero. Which, if we're being honest, rarely anything goes to zero. And if it does, then you probably sold it already before. But a winner can go up 100, 200 if you're really a long-term investor, 1,000, maybe even more. So it's all about perspective, I would say.
First, let's see. Shout out to Alberto. Enjoys my haircut. Thank you. Let's say another one here. I saw Max. I bought 2 weeks ago before the market goes down, and sad face. Max, I wouldn't consider that the worst thing. I think there's this story, right, Neil, with like even if you are the peak buyer of the cycle, especially of like kind of like an index or an ETF, in the future, you're still end up green, overweighting. Again, maybe it might be different if you're buying quantum stocks. I'm not here to badmouth quantum stocks, but I am here to do that. Or maybe some speculative AI plays, then maybe it's not that situation. But I do believe if you kind of have those strong companies that we're already making revenue, some nice free cash flow, some nice growth opportunities with whatever technology is moving, you have the great probability of, even though you bought in the down, you could be bullish in the long term. You could be great in the long term.
Yeah, and I think we touched on that last time when talking about opportunity cost, right? A specific stock can underperform for, let's say, 3 years, but maybe in year four, it outperforms the market's return in the last 4 years. And I would say I wouldn't be sad. I would be quite happy if in year four I outperform the market's performance in the last 4 years, because essentially that's what you want. You want to outperform the market if you pick individual stocks. You don't compete against another individual stock or against another individual investor, unless unless you want and that's your competition, then okay. But I'm here to invest and beat the market. If I don't think I can beat the market, then I might just buy the market and be done with it. But I believe still that in the long run, I think I can beat the market. And of course, that comes with volatility. So sometimes I'll be down more, sometimes not.
And we probably might have, I think during every cycle, Neil, right, we kind of get more investors, new investors into the cycle. And usually it's not going to be always the case, but I'm going to guess that a high probability of or a high percentage of new investors are usually younger individuals. And if you're a younger individual and just started the market and you feel like you bought at this high cycle, just remember you should be bullish more on yourself. I remember when I started to invest, I was probably putting, uh, I thought I was putting a lot of money into the portfolio, right? I thought I was, and it definitely is important. This is why I never kind of look at anyone's portfolio and see like it's a little bit different than mine, because what might seem in 2020, when I was 21, maybe $100 seemed like a lot of money to invest. Now, 10 years later, actually 12 years later, I'm more than like 10x I put on a weekly basis what I used to put back then on a monthly basis. So I'm happy I made a lot of those mistakes early on. Now that I'm able to put so much more money into the market, I'm happy to understand a lot of those experience. So if you're a new investor and you kind of just bought really new and kind of at these highs and are seeing kind of this pain, remember that future you is going to make a lot more money. Future you is going to be able to invest a lot more money. So your current you right now is just to understand how the market works, understand how your emotions work with your portfolio. You'll learn about portfolio allocation. You'll learn about what type of positions you like to own. So take this more as the opportunity to learn, so future you can be throwing a lot of money and be a lot happier later on.
Very well said. Very well said. I think you have a super chat waiting for you.
Yep, let's see. So Darren here, do you think the threat, and appreciate the super chat, do you think the threat of government shutdown has anything to do with all of the selling? Uh, Jones, I'm going to say I very rarely follow any type of macro stuff or any kind of like cycles like this. I mean, historically, we have heard of various government shutdowns in various administrations. I don't think I think just volatility and uncertainty is what's creating some of these opportunities and selling. I don't think one point can never be brought to the reason a stock or a market is down. I think it's just continuing addition of uncertainty and everything that's happening right now. It raises the question: what will the market do? How will consumer spending act within the next few months? How would all this change with whatever's happening with tensions globally, trade wars, interest rates? And it's just the uncertainty. And the more uncertainty, the more volatile the market acts.
Agreed. Plus, I mean, it would be strange to have a government shutdown when don't the Republicans control it all? So why shut it
Yeah, that
down?
is true. It's usually when there's like a stalemate somewhere, right?
Yeah,
That the shutdowns are more likely. But with full kind of control, it's very rare to think of that.
Yeah. Plus, I do want to say one thing, and that with all the tariff talks, I find it very funny that Chinese stocks are performing very well. It doesn't make any sense, and I'm very happy. I'm very happy because I've increased. I mean, late last year I have increased my Alibaba position, but I found it I found it very funny to see like all the tariff stocks, and then you see Chinese stocks outperform quite comfortably. Plus, you also see that China is experiencing deflation, which is also not great. But yeah, everything's flipped around. Everything's flipped around. Chinese stocks performing well, don't care about tariffs, don't care about deflation. Uh, Bizarro world.
Maybe I don't know. Obviously, I think with a lot of these Chinese stocks right now, you kind of have that risk already included into them. I wonder if the risk was thinking the tariffs or stuff would be a lot worse. So it's like, oh, look, it's not as bad as we have previously priced in. But the market is so weird right now. It's you can expect something to be bad, and you see the contrarian on the stocks.
Yeah, but yeah, I don't know. It's very strange because a tariff war with China is a bigger deal than one with Canada, for example, especially for the United States. For Canada, it has a bigger impact, but apparently the market. I mean that's the market for you. Sometimes it doesn't make much sense, but I enjoy watching Alibaba in green. Makes me smile a bit in all this red. And by the way, did get confirmation from Amit. He is indeed sick. So he's not touching grass, fortunately.
Let me just send a quick message while I'm here.
Let's see. Thoughts on the trade desk. The trade desk is a very interesting one because the stock is down 50%, I think, in the last week or two? The last month, it's down 50% because they missed. Let me pull this up. They missed earnings expectations, their own, for the first time in 8 years, which, let's be honest, is not such a big deal. But it wasn't a cheap stock. It wasn't a cheap stock at $120. Even today, it's not the cheapest one out there, but it's much, much better than before, much better at $58. I actually talked about it in my video 2 days ago. Stocks under $100 that look very attractive. That's one of them. So I miss from their own guidance. First in 8 years, there was a small delay from from a product launch called Kokai. They thought it wasn't ready yet to be fully released, so they rather take a small revenue hit, but release it when it's actually working as expected. They're also making some changes in house. They need more executives in the company, so some changes in house. And what we're getting here is a 50% haircut. Market doesn't like uncertainty, but it's a very good company, great management, great track record. And I know I give this example quite a lot, but if you look at what has happened with Adyen a year and a half ago, Adyen, great company, was not the cheapest one out there. They basically said, look, we're going to invest in the short run in the business for long-term success. It's going to hurt our EBITDA margins. Stock also got slashed in half, basically, in a matter of a month. I'll pull the chart up right now, and you can see what has happened since. Well, this is basically the crash, and we have basically recovered since then. So I think I will expect the same from the trade desk. I do not own it, but it's one I'm watching because it's advertising, so it does touch some of the other stocks that I own.
I just want to give a shout out here to Tim. Tim, I completely all in on NVIDIA and now have 838 shares. I wasn't nervous about the price drop, quite the opposite. I was so happy that I bought more. So Tim, best of luck to you. No matter how bullish I am in a company, Neil, though, I don't think I can ever go 100% in. But I always find it pretty impressive with those players that do, right? I mean, you hear these crazy stories of people who bought 100% in Tesla earlier on, who went 100% in all these companies, Palantir or whoever. So it's to me, I can never match that risk to reward ratio, but it's definitely best of luck, Tim. That's all I can say.
Yeah, I mean, he's reaching the 1,000 share mark closely. I'm almost at 100 shares in AMD, and he's almost at 1,000 shares in Nvidia. I only need 6 more, so maybe in the next couple of days I might be adding if it stays under 100, and then I'm at my short-term goal. But yeah, I mean, going all in. I mean, I've seen people where it worked out very, very well, right? You only need one to hit very, very, very well. But of course, you need the guts
The
to do
guts for
it.
it,
Yeah.
yeah. Um, Neil, I know we both cover big guys want to know. Talk about Oracle, please. I know we shared some of our thoughts early on, but maybe just a top level overview. What got you excited about earnings, and maybe thoughts on the company right now?
Yeah. So I don't own it. Um, it there was a double miss, but to be honest, I wasn't that surprised to see the numbers. It's all about what's ahead, and what's ahead is very, very exciting. Remain performance obligation, or you could say that this is the backlog, is now at $130 billion. They're basically working with all the big players in the market. All of them are choosing to work with Oracle. Um, because of the tech, because of their speed. They actually talked specifically on that during the earnings call. A very good company. Market, I think we said it last week, the market was a bit ahead of itself. So we're seeing the stock correct a little bit, but it's a very good company. And what they told us is that, well, the AI story is far from over. They see acceleration in growth in 26 and in 2027. So that's basically the big overview. Jose, if
Yeah,
you
I
want to
mean,
add
just
something,
strong
go
growth
ahead.
in cloud is still expected, and I believe it's going to happen. We discussed it, Neil, where the Stargate project still hasn't even been included in their RPO. RPO is still massive. I am curious. I wonder, Neil, if they have any videos on it. They really talk about how they've kind of have this automation system to build up these data centers, which allows them to make it cheaper. I would actually love to see that, and to see if they're not just like selling us hype or something like that. I would really like to see how they build up these data centers, because they make it seem like it's some completely different animal, which allows them to do it much cheaper than any competitor.
Yeah, agreed. Do we have Micron next week? I think so, no? I think Micron reports, let's see. Micron reports, yeah, the 20th. Oh, interesting. That's going to be a very interesting one, actually. Micron next week. Thanks for the reminder, Vexel. What else? What do we have here? Thoughts about BYD earnings? I did not. I mean, although I'm a Tesla shareholder, I did not check on BYD earnings or expectations. Is it too late to enter Saab? So Saab is a European defense stock, just like Rolls-Royce, Rheinmetall, Rank, and Buy System. All of them have gone up quite a lot in anticipation that, well, there is going to be a huge increase in defense spending. So is it too late? I don't know. To be honest, I just put them on a watch list just to see what happens, but I didn't really dive into those companies more deeply, so I can't add more.
Yeah, Neil, there was back to Micron, and I think this might be the last question we might be able to take. Oh, not that one. Sorry. It was this one. Thoughts on any earnings coming very soon? Will they beat, do you think, Neil? Again, I no crystal ball here, but I feel like tariffs can either have two things for Micron. Either it could be accelerating the growth, like some of these players might be trying to get as much memory as soon as possible. So they're trying to over order before they kind of get hit with a lot of these tariffs. So maybe that could accelerate revenue a little bit faster than expected. So commentary after that would be very crucial. Would it be like, hey, look, we saw a huge growth, but it was more just an over order coming in before a lot of these stuff. So that might be perceived as negative. The other thing is we can kind of go the negative way and be like, we started to see, even though we were expecting consumer tech to pick up in the second half of this year, we're actually pushing that even further out now. So long term, I think there's still a lot of growth potential for Micron, as you're going to need memory for anything happening with AI innovations. Um, in the short term, it's become one that I think is going to be very volatile because of just everything happening. I think Micron would be one of those that really does get impacted a little bit more in stock price volatility due to tariffs.
Yeah, no, I agree. I mean, we know that the upcoming quarter revenue was a miss, $7.9 billion instead of $8.9 billion. Then we've got some comments from executives that they're going to face, I think, 100 basis points headwind with margin. So the focus is definitely going to be on HBM and guidance. And I think HBM is still doing very well. And I fully expect guidance to be better than what they gave us 3 months ago. So it does help that the stock is under pressure before the earnings, so the anticipation, the expectations are a bit lower. I'd love for the stock to come back to over $100, but if the business has to continue to do very well, that's the most important part. With regards to pricing in memory, I think they already had their prices fixed for 2025, if I remember correctly. It's only the discussions for after that where prices are going to increase. So could definitely help them in the long run.
Yeah, and honestly, I completely forgot to mention the HBM. Very bullish in that, regardless on tariffs. I think HBM is still capacity constrained, so we should still see strong numbers there. What would be pretty impressive is if they do mention that maybe they increase their capacity expansion a little bit more earlier on, like maybe they were expecting some of these plants to open up maybe late 2025, and they say, hey, look, we can actually open it up mid 2025, and that's something that is very possible. It's not like hopes and dreams; it is possible, not a guarantee, but something like that, Neil, can definitely change sentiments towards the stock.
Yeah, I agree. To close it out, we have Ariel saying that we have to sell AMD. He says it will take forever to get to 120 again. So I will make here a statement. I think we hit 120 before the end of the year. And if not, I'll sell you one share of AMD. We have it here on the
We
record.
have it here. All right. So just want to give a quick shout out to everybody that joined us. And again, I mean, I think we're going to reiterate this, sound like broken records. Markets days like today suck. But if you've been in this investing world before, patience is definitely crucial. And for new investors, obviously it sucks to kind of see a portfolio down. But like I said, future years going to make so much more money that the type of money you're putting in right now in your portfolio is going to be nothing to what you'll be able to put in the next few years. So right now it's more of a learning lesson. And who knows, maybe we turn green soon, or we will start doing a lot of these therapy sessions for a lot longer.
Yeah, no, I agree. Well said. Nothing more to add, to be honest. You said what you said. What you said. Beautiful ending here. So let's keep it at that. We'll see you all on Thursday, and maybe who knows? We'll try and do this a bit more in the future. We'll definitely let you know. So we're back on Thursday, and yeah, thank you all for joining. We'll see you all